What's going on, good people? It's Kevin O, and I'm back going hard on the interview circuit. Got another amazing show for you today with my brother Ashton Addison, who I first met at Tulum Crypto Club. He is the founder and host of Crypto Coin Show, and he is a very knowledgeable man to talk all things Bitcoin, Ethereum, blockchain, crypto, DeFi, Web3, metaverse. We're going to talk about all of it. I'm going to try to have Ashton explain crypto to me and you guys like we're 5 years old, because I think a lot of folks, the main thing that is challenging them in the blockchain space is education. That's all it is. Just like when email first came a thing and websites were a thing, just like when mobile apps and Facebook on your phone became a thing. There he is, my man.
Hello.
What's good, brother? Grand
How
Rising.
you doing, Ted? Good to see you. Likewise. Well, I guess it's evening where you are, isn't it?
It is. It's nighttime here in Bali on the islands. Where are you at?
I'm in DC right now.
Wow, the heart of darkness, huh?
Yeah, wow, looks like the friends are coming in even though it's early.
Nice.
Amazing.
Crypto crew represent.
That's
Well, awesome,
crypto never
brother.
sleeps.
That's right. That's true. What's alive in DC? Are you getting some amazing blockchain lobbying done for those decision makers there?
I think they're coming up with lots of bills. How many are in favor of cryptocurrencies? Not as many.
Right. But
Yeah,
there are
but I did
some
just
that are
speak.
starting to understand it.
Definitely, yeah. There's definitely progress. Of course, it has to come with regulation and following the proper rules. If crypto evolves into what it's going to be, it's going to need to be hopefully better, but it's going to be similar to the banking system where the regulations are meant to protect people. And right now in crypto, there's definitely a bit of a Wild West situation where people take control of your own funds or do your own research into some DeFi protocol that may or may not exist years from now, and your money could be at a loss. And we've seen that throughout this year. A lot of people getting into crypto um, that they, many friends of mine, for example, in Celsius and these yield
Right.
generation platforms that offer a small amount of yield, and it ends up costing them 100% when they can't get their funds back.
Right.
So a lot to learn when you move from a traditional banking system that is supposed to hold your hand but take their cut to a
Right.
system that is more sovereign, but you are the one in control, and
That's
you
it.
have to be diligent, especially on this crazy internet world that it's hard to tell what's real and what's not.
You said it. You got to take radical responsibility, and that's why I'm so bullish on the technology and the financial piece of this, is because it's inviting humans into more responsibility, sovereignty, and transparency. And we're going to get into that.
Mm-hmm.
Ashton, real quick for the folks, just meeting you and when they'll watch this video later, can you introduce yourself a little bit and what you do with Crypto Coin Show and also your history in the blockchain space?
Would love to. So my name's Ashton Addison. I'm currently running the Crypto Coin Show on YouTube, which is just an interview segment where I speak with founders, investors, and startups in the crypto space, whether they're building the next protocol, the next Ethereum, or they're building a use case to implement blockchain into a specific industry. Um, Talk to over 1,000 different projects and episodes on my show over the last 7 years or so. So I've been fairly tuned in to what companies are building, what industries are being revolutionized by this technology, how it can benefit every industry. They say, any industry that has storage or that transfers data, which is almost every industry.
Pretty much every industry at
So
this point in 2022.
yeah, so it's just a matter of when will this technology actually revolutionize the industry. And there's many industries that are not ready to implement blockchain because they're still a little early. For example, I was running this event ticketing platform. Starting 5 years ago, I made a blockchain secured event ticketing. It's a major problem, having counterfeit tickets, not being able to verify the authenticity. Blockchain seems like the perfect use case, right? So I was working on that initiative myself, and some of the VCs, I spent a lot of time raising money and building a team and developing a product and putting it into the market. And, it didn't end up working out in the end because it was a little bit too early for the adoption of this kind of technology. That was before NFTs existed. And now there's still blockchain ticketing companies coming out, but they're all building tickets into NFTs. And there's newer technology that makes it a little easier to integrate into the traditional business. And, so back then, it was too early. And, one of the words of advice that I had from VCs raising capital was being early is the same as being wrong if you have a startup. If it's not at the exact right time, timing is a very important aspect of when you launch a product or a service if the world needs it at that time. And there's so many products in crypto and blockchain right now that are needed right now, and there's many, many, many more to come that don't know they're needed yet, but eventually they will revolutionize, I believe, and improve the world and every industry that sort of runs today.
Yeah, and I agree with that. I'm all in on it. And since I first heard about Bitcoin, right, and someone, my good friend who was like deep in software development, like hyper intelligent, quirky, he's like, check this out. I'm like, what the hell is this? Magical internet money? Cool. I was just kind of like, cool. I put it in the cool folder in my brain. Later got into, trading, fucking around with it. And it wasn't until I read the white paper, it wasn't until I started to actually research it instead of just like, oh, number go up, right? Oh, this is crazy. It's so speculative, which is awesome too. But that's when I started to be like, oh shit, this is going to change everything. It's going to change the internet. It's going to change banking. It's going to change, how we think about trust. I look at it, I'm a philosopher. I'm a crypto philosopher, a bard in the space. So I think it represents something much bigger than just a cool tech or way to transact. So I'm curious, Ashton, because I was just watching Pompliano on YouTube explain Bitcoin to a guy like he was 5. And, this is the number one issue. Most people are like, what is this shit? I still don't get it. I don't get it. So my challenge to you for posterity on this video is, can you explain Bitcoin to me? Because it's the first cryptocurrency, AKA the blockchain ledger. Can you explain it like I'm 5 and also for our viewers?
Sure. I love doing that. I feel a lot of people have a hard time understanding Bitcoin because it's different from the traditional system. However, the traditional system was designed on the surface for you to not really understand how it works, right? And that's the reason why most people don't understand Bitcoin, because they don't know what to compare it to, right? And when you realize the intricacies of the traditional system and how the banking system works, how the money is printed, how they control the inflation, how they determine where to spend money or how much to print and how much to pull out of the ecosystem when they want to sort of adjust the money supply, you realize, and was part of my journey when I was beginning with Bitcoin. I read the history of money, all of the monetary novels, and then about Bitcoin and the differences of it, right? And that took a long time. And although some people, it clicks for them right away that they understand Bitcoin when somebody explains it, because they're not hesitant to change. There's a lot of intricacies on the differences. So with Bitcoin, it really is similar to the money that we have today in a sense that it's a norm. It follows the principles of money, which there's normally three principles that you would learn about in economics: is a unit of account, store of value, and a medium of exchange. Those are the three sections that need to be ticked in traditional economics to qualify something as money, right? And both US dollars and Bitcoin have that. However, when you look at it at a more macroeconomic level, you zoom out, you look at how the money is created, right? Because does value just come out of thin air? Where does this value come from? Obviously, there's value in somebody accepting the money for some goods that you're going to pay them. There's value that they see value in the money, so they're going to accept it. But why? Right? It's because they can use it as a store of value and a medium of exchange in the future, and know that that money is not going to be worth less than it is when you're receiving it. Right? Back in the days when they were bartering, as you love to go on about a bard, it was hard to have a medium of exchange where the store of value was the same, right? Because you had a cow and you traded it for a chicken or 10 chickens, and then that was sort of the exchange rate. And then you had 10 chickens, well, one could die, or are 10 chickens worth 2 sheeps, or like how do you whereas with dollars, everyone knows $1 is $1, $10 is $10. It's always been the same, right? But in reality, because of the way that the monetary system works, that people don't really understand in how in the economy grows, and then because of that, they need to print. A small group of people decide what's best for the country. Supposedly, the smartest people decide, hey, the economy is growing, but we also need to print a little bit more money and inject it into the economy to help stimulate growth. But at the same time, because we can print unlimited amounts of money at almost zero cost, we can just keep printing. And when we continue to print, it devalues all. If the economy is a $1 billion economy, and then they print double the money, there's going to be that it doesn't just magically increase the amount of value. The value is the same with double the amount of money, which means all of the money is actually worth half of what it was. And it's hidden, because when you see on the $10 bill, it still says 10. It doesn't magically erase and turn to 5. But the hidden inflation in the prices of things at stores rising. It's like, just going around in the US here and at most places in the world, I'm sure, we're seeing the numbers now on the news where the inflation is 8%, 9%. There's a noticeable increase in
the average
prices for things at grocery stores. Everything is up $4 or $5. Why? Right? It's because of the amount of money that they printed in 2020 and for the last 20 years, the hidden inflation finally coming up to the light. But it's more noticeable in the last 2 years because of this 30 to 40% of the whole money supply they printed, which doubles the price of everything. Slowly but surely, your $10 will be able to buy only a loaf of bread, right?
Well,
and that's what we're seeing.
This is an important stat, Ashton. Like, people, I don't know if people realize this. This is fucking mind-blowing. Just in 2020, 20% of all US dollars ever were printed. And then in the past 2 years, would you say like 30? It's higher than that.
Yeah, 30. Yeah, 30 plus a few percent of all of
all
US
dollars
in existence
ever.
Since 1913, when they created
the
Federal Reserve and that kind of new money system. So over 110 years. And when you understand that Bitcoin has those 3 principles of money, but in the way that it works is that instead of being governed by a small group of men that think they know better, it's governed by code, economics, and game theory, where in a sense, people are competing to keep Bitcoin honest, to keep it fair, the way that it was designed so intricately by the cypherpunks, coding out how the supply and the economics will work in Bitcoin. People are incentivized to keep the network honest so that they can earn their fair share of the newly minted Bitcoins that come in through mining by verifying transactions. And the supply of Bitcoin is known. Every 10 minutes. We know how many Bitcoin are going to come into existence until the very last Bitcoin exists. And then none will ever exist after that, plus coins that people are losing, sending to the wrong address. It's actually turns it into a deflationary currency, whereas right now the US dollar and many of the national currencies are inflationary to hyperinflationary, where if you're holding, say you got in 5 years ago, your money would be worth 30+% less. And if you got into Bitcoin 5 years ago, your money would be worth thousands of percent more. And it's always, for the most part, besides the scares in the news on the volatility and all of the things that can go wrong and the criminal activities associated with this, it is the best performing asset of all time, and a store of value, medium of exchange, unit of account that has worked better than all of these national currencies. Never mind being able to transfer it internationally. I know to somebody in Australia, you could send $10 million with a transaction fee of 4 cents, and in 10 minutes they would have the money with no counterparties or intermediaries or fees to anybody that's doing the work for you.
This is another game changer. Let's put a pin in this one also, Ashton. If you want to move money in your bank, and everyone watching knows what I'm talking about. If I just want to move like $500 to your bank account or like somebody in another country, and I do a wire transfer, or I do it, through a little debit transaction, whatever. How many business days does that take? It's like a $30, sometimes $50 fee, depending on your bank. And then they have to just sit there and wait. If they need that money now, too bad. Because if it's the weekend, it's going to be like the weekend plus 3 to 5 business days. And what you were just sharing, this happens all the time, especially on the Lightning Network now in Bitcoin. Millions, 10 minutes. I mean, that's long. Few minutes, and a very small transaction fee. Instantly, boom, it's in your account. Use it for whatever you want. This is one of those things where the banking system, the legacy banking system, is running on MS-DOS, and Bitcoin, and even all the other crazy stuff that's built on Ethereum. It's just like a quantum computer compared to that, and it's in its infancy. It's actually very much in its infancy. So that's another really important thing to understand for folks is, transnational, instant, no counterparty transactions.
Mm-hmm. Yeah, no, it's a beautiful thing, and I love to give that example because you're right about the banking system, especially if you're trying to move to Australia or the funds across the ocean. What if you happen to hear of a great opportunity on Friday at 3:30, and the money needs to be there before Monday? Well, it's pretty much impossible with this antiquated banking system, even with online banking. Sure, the brick and mortar people don't want to go to work on the weekend, but surely through the power of the internet, this money could move to the other bank because it's all digital, within 4 days. But somehow that's not possible, right? And one of the things that people have a hard time understanding about Bitcoin that are getting into it is because it's not tangible. You can't hold it in your hand like a paper dollar, right? So if it doesn't exist in physical reality, then it must not exist for them, right? And people have a hard time grasping that. This is digital money. Well, if people would read the history of money and where money is at right now, with the national currencies, they would understand that almost 90+% of US dollars are digital.
Right.
Almost everybody is using the same digital version as you would in Bitcoin, except in with US dollars that are digital in your bank account. It's all a part of the sham that they run, that if you don't have the dollars at your house, that's actually better than digital, because once you put that US dollar in the bank, uh, and you go try to
It's
take it out,
gone. It's
most of the
not
time
yours, by the way.
it's not yours. It's not yours. No.
No. It
Um,
exists as an
when you
IOU, and it's
Yeah, they lend it
fugazi.
out, right? And that's what the fractional reserve banking system is that the rule for the bank is that they're allowed to lend out 90% of the funds that they have. So if you put in $100, they say, perfect, you just gave us $90 for us to lend out to somebody else at a high interest rate. And then we can charge them interest on that money that's actually yours. And then hopefully you guys both don't come to the bank at the same time and ask to withdraw, because we don't actually have everyone's money. We're taking everyone's money and loaning 90% out to others. And then when they take that loan and put it back in the bank, then they take another 90% of that. And it's just like money on top of money that doesn't really exist. And there's many stories in the news. There was one guy in Southeast Asia. He just went to the bank and tried to pull out all of his money, and it ended up turning into a hostage situation because they were trying to arrest him, and they didn't let him take. They sent him to jail because he had too
Wow.
much money in the bank and he wanted to get it out all at once. And they're like, no, you can't have it, and we're gonna throw you in jail because you're not allowed to get your own money out of the bank. Imagine that you go to the bank in America and you want to get your own money, and you end up going to jail because you forcefully ask for it, and you realize that it's actually not yours. And the case
No.
with Bitcoin is that as long as you have it in cold storage or not on an exchange that has access to your keys, as long as you have only access to your keys by yourself, the passwords, the codes to the coin, no one can take it. There is no such thing as the bank isn't going to give you your funds back, because you outright control it, and you can remember the codes in your head and take it to
Right.
any country in the world and type it in, and it will be there. There is no comparable to that in any currency in the world, and that's what makes Bitcoin so great.
Beautiful. That was uh that was a little more complex than I think some people will be able to handle, but you covered all the bases on, first off, why people should be inspired, first off, to even learn about this is
Mm-hmm.
because of what you just nailed, which is sovereignty, which has become, a buzzword for some folks, but it's a real thing. Like you just said, like, I think it was proved to not be true by the Chinese official media, but there was like a bank in rural China where everyone, like, it was like basically like, yo, we all want our money. And there were like
Mm-hmm.
tanks guarding the bank. It's like, we don't have all your money. And like, please leave because we'll protect the bank with force. And that's the crazy part right now. And this happened during the Great Depression, runs on the bank. Everybody's like, fuck,
Mm-hmm.
I need to get all my cash under my mattress. And the banks basically close the doors with some, nice men with guns. And they're like, hey guys, you need to go home and go back to work because we don't have it. And this is part of the understanding of like, oh, okay, money's energy. It's a store of value. What is value? Who do I trust with my value? Right? And these are some of the questions that the blockchain ledger really makes apparent with code instead of, like you said, a room full of guys that's like, hey, let's set the interest rate here, or hey, let's print 2 trillion because we can. And that doesn't feel very good for humanity and sovereignty in general. But anyway, Ashton, let's move on to what's happening right now. Let's jump to present time, current day. A lot of people are, as you mentioned at the beginning, hurting or have lost trust after Luna, Celsius, Voyager. A lot of these places went bankrupt. In a similar way, where like TradFi is actually coming into DeFi, acting like banks, going into
Yeah.
massive debt, loaning or leveraging people's coins, and then the coin value goes down and they got caught. Can you kind of describe we're getting a little more bullish again. The merge is coming. We're staying sideways. We're going up a little bit. But tell us what's going on in the crypto world right now.
Sure. Yeah, one of the things that, although Bitcoin and cryptocurrencies and decentralized finance it involves these coins that only you have access to if you wish. Of course, it's a very enticing thing, and there's many companies looking to capitalize on an asset that's growing so quickly. So of course, companies are going to pop up like Celsius, offering yield, acting like actors that are in your best interest, that will do similar to what the bank will do, right? They're like, store it with us. We'll give you, with Bitcoin, they were giving 6% per year. And then they're taking, it's even though it's on the blockchain, they definitely moving your money around to different DeFi protocols and trying to earn a yield higher than that so that they can give you 6%. However, for example, Celsius, they were a part of some DeFi protocols that were offering high yield, and those ended up being rug pulls. And then they ended up losing 50 million here and there of people's money on scams that they thought were going to be high yield investments that would out yield what they were offering people at Celsius. And then they could just pay them back after and keep the difference, right? And sometimes things are too good to be true, and that's especially when you're in cryptocurrency and there's things that are offering so like something that just sounds like it's so good and easy to do and such a high yield without doing anything. Almost all the time, it's too good to be true. It's not real. And that was the case for me with the Luna Terra ecosystem. This algorithmically backed stable coin called UST that, in the decentralized finance world, the main stable coins like USD Tether, Coinbase's Circle were offering 10% yield per year, which is crazy compared to the bank, usually giving you 0.1%, or, you would never hear about more than 1% coming out of your checking account.
A high yield checking account is like point.
Yeah, exactly. High interest savings is like 0.2. You're like, what the hell? I'm getting 10% on Tether, right? And people are like, okay, Tether is stable. I'm not going to have to deal with the volatility of crypto. However, UST was offering 20%. 20% was such a high number that I was putting red flags in my brain, being like, this sounds too good to be true, and for that reason, I stayed out. I owned a couple dollars worth of UST, but I never started staking it for 20% or started using it to leverage in DeFi and buy all these other things, because it just sounded like, why? Why is it 20%? Like, is this guy that controls this such genius that somehow he's managed to double the yield of everybody else and they haven't managed to catch up yet? Something smells fishy. So I did avoid that. But part of the cycles, and this goes for the stock market and crypto, and when companies are, the cycle of companies from them in the seed round to the private rounds to then doing an IPO and listing the coin or listing the stock. It's a dog eat dog world in business, right? And I experienced this when I started raising traditional capital in Canada through some investment broker guys, and then they wanted to do an IPO, and these guys had done many, many IPOs before, right? And once they do an IPO, essentially they raise money at seed round, private round at small valuations, and then as the company grows, and depending on whether it's all organic growth or also just hype of an impending IPO, they keep raising the price, and then they put all the marketing hype on when the IPO and the coin launches, and then all the small people dump on the public investors, right? And the Coinbase is a great example of this. Coinbase was raising money for quite a few years, and they launched their IPO at the top of the crypto bull market, and Coinbase stock was like $400 per coin, which is the ticker, and everyone was like, "Oh, Coinbase, like they're doing so well, right? Let's just buy the stock." I had my friends were like, "I'm just gonna buy one to like see," and I told them, "You guys, this is this is such an overvalued multiple of what the private investors bought that most of the investors, they even had news articles about like Kevin Durant and the NBA players that had bought Coinbase stock and were up over 100x. They all sold to you on the
Right.
day that it launched at $400, right? And now we're seeing the stock, it just hit lows. It did pump up off of some BlackRock news in the last 2 weeks, but it just hit $50, right? So if
Hmm.
you, as a public investor, are going to buy Coinbase on the day it came out for $400, it's now $50. That's a horrible investment on your part, right? And in crypto, once the coin is, there's that initial sort of that game where they all buy into the private sale and then they try to get their returns in the public, right? And that happens for coins as well. But there's
Hmm.
also that cycle of when the coin is public, like Bitcoin, for example, and Ethereum, over the 4 year cycles, there's a lot of hype and marketing when it's at the top, and that's when the smart investors are dumping on the little people, right? The 1% is selling to the 99%. And that
Right.
happens regardless of, it's nothing to do with Bitcoin, right? It's to do with markets in general. That when there's hype, last November 2021, people were having dinners to get new people into crypto because they're so excited about
Right.
all of the price increase, right? All of the greatest investors are buying these assets when no one's talking about them, right? They say buy the rumor, sell the news is a very
Yeah.
common quote. But in this case, it's not even the rumor. For these pre-sale investors, they are so hungry. They're looking at opportunities that will give them a return when this hits the limelight. And so all of the dumping over the last 6 months has been sort of that of course the rug pulls and like the Luna and the crashes and everything. It's a cascading effect from when
Right.
the people sell at the top, goes down a little bit, and then because people are so leveraged and so greedy, I would never recommend anyone here specifically to use leverage, and because
Yeah.
you think you're doing well until you lose it all in one click. You can easily do 4x, 5x, and then zero, and it's gone overnight. Um, but some of the greatest thought to be greatest hedge funds and funds that were in this last run, they were all leveraged heavy. And when January, February came and the crash started coming down, they all lost everything, right? Like the 3AC was supposed to be one of the greatest hedge funds, and they were managing billions. And they had even convinced uh, other lending companies and traditional funds to give them like billions without even audits because they were positioning themselves as like we're the greatest, and people that were lending the money had that thought like, well, if everyone else is giving the money, somebody must have audited them. We don't even, maybe we don't need
Right.
to bother to ask because we don't want to bug them, right? But in a sense, they weren't audited. They were just a bunch of kids that played the greatest scam of all time, and everything come crashing down. And you know, when the market crashed in May and June, I was getting a bunch of messages from new people that weren't in
Right.
crypto. And they're like, hey, we just saw crypto in the news, saw Bitcoin in the news. I'm thinking that this is my opportunity to buy some because it's down, right? And I've been getting these messages for 5, 7 years of, when people message me saying, hey, I want to get into crypto. And whenever that happens, I always see that as a yellow flag. I'm like,
Right.
okay, if new people, because the game is that it's always the 1% trying to take funds from the 99%, right? And if somebody that's not in it comes to me and is like, hey, I saw it in the news, like I think I'm going to buy now. I'm like, that's a 99% signal that this isn't the bottom because new
Yeah.
people are being like, hey, I think I should buy, right? It's when everyone forgets and and other things are happening and the market's going sideways and it's bottomed out for the most part, 71% or whatever the average is of Bitcoin's drop. that's when people are accumulating silently,
Right.
waiting for the next cycle to go up. And there will be a next cycle, and it will go up, likely above all-time highs. And all of the platforms will, as they have done 3 or 4
Right.
times over in each 4-year cycle. But it's a long game, right? And they're and it's always the case that they're always trying to take everything from the 99%, you and me, right? And they do their best to drop all the coins to zero almost, so that when they get down there, you have none, you have no extra, side cash to buy anything, and that's when they buy it all up, and then they pump it back up. So
Right. So this is one of the unfortunate things, which isn't blockchain or Bitcoin or Ethereum. This is just human greed in an emerging innovative market that's playing out again in the same way it would play out in the stock market. And nothing on this podcast live is financial advice, just for everyone watching. Now, something to be clear about, and what you're describing is kind of the emotional side of the game, which is
mhm.
when everyone's like, oh fuck, like it's going to zero, everything's fucked, let's just forget about it, no one's talking about it. That's actually the time to buy, which is the hardest thing. And then when you're
Yeah.
when you're taxi driver, your Uber driver, and that one friend you never talk to is like, hey man, I'm buying Doge, like you want to get in, like should I buy this? That's a lot of times the sell signal, or it can be. So
Yeah.
that's just something to
Yeah, no,
understand,
I
folks.
experienced that in the last hype cycle. It was like around, in the fall of last year, and these guys that, they really weren't, um, they a lot of the times people see the greed that's possible, and they start buying into the craziest things right away, right? Like,
Right.
people had some friends that they didn't even own Bitcoin or Ethereum, but they were owning every Shiba Inu coin, their Floki coin, all these other coins, and they were like, "We need more, we need more, we need to buy them right now." And I was like thinking, this is so weird. Like, dude, you don't understand the principles of Bitcoin and these coins, and yet you're buying these ones that have no underlying value. It's like, yeah, but I've made so much, right? And it's when the market is most irrational at the top, when anything that has no fundamentals, like Floki and whatever the dog coins, pump up really high, that's like a top signal, right? And I thought that was so weird, and then I realized, like, a month later, everything came crashing down, and I was like, okay, that was when people from the park are trying to buy Bitcoins, they can buy like weird gambling investments. That it's at the market is irrational, right? And smart. I always like to think, what would smart investors do? You know, and having a degree in finance, I try to use some of the principles that they taught me about, having a diversified portfolio, thinking in the long term, not going based off emotion, like you say, and zooming out. They're all, from what I understand, all the smartest funds and investors in crypto all have the same investment horizon, being more than 5 years. They're not looking for people, looking for themselves to get rich, by next month, right? Like, get rich
Right.
quick with crypto. That is not what professional investors are doing at all. They are in it, and they also zoom out and they look at the hype cycles, right? They see, last November, all these new people are getting involved, and the fear greed index, which is a common indicator that you can look up, a Bitcoin fear greed index and Ethereum fear greed index. The greed was high. It was like
Yeah.
60, 70 out of 100. And if you're thinking in the next 10 years, you're like, okay, well, maybe if I wait until that's below 50, when people are crying, then I can get a better entry for my position, which I don't need to worry about because I'm going to be holding it for 10 years plus, right? Or they're doing the dollar cost average strategy, where it doesn't matter what the price is, right? Every paycheck, I put $100 in. Every week, I just buy $100 of Bitcoin, and then it's up, you buy more. It's down, you buy more, um, and eventually, years from now, every single purchase you've made is in the green.
Right.
So that sometimes that's better for people than trying to time the market, of having emotions of like, oh, should I buy now because I think it's going to go lower? I should just wait, right? It's like, no, just buy. If it goes lower, buy more. If it goes up, buy more, right? I like to tell, in a non-financial advice way, I like to
Mhm.
say, always buy, never sell. Because smart investors never sell. I watched this great uh, video by Mark Moss, who is he talks a lot about Bitcoin, but he also talks a lot about the impending collapses and what smart investors do. And he talks about how smart investors never sell, right? And they use debt, good debt, to buy income earning assets. And they never sell those assets because when they do, there's a taxable event. And he was talking about taking your Bitcoin and using um, DeFi or other lending services that aren't risky. Everything has some risk, but things that are not
Right.
high risk,
Low
to
risk.
leverage the Bitcoin that you have to get more capital to use that to buy income producing assets rather than having to sell your Bitcoin. You can loan against it, and many smart rich investors do that. For people that are just getting into it, I don't recommend doing that. Just keep trying to accumulate your spot Bitcoin. But I'm just saying this is how smart investors are thinking, because it takes a lot of steps to get to that point, right? It's like you can have a diversified portfolio that's only worth $100, and it's great, but to earn money, you have to have money, right? And it especially works at an exponential rate in investing. Is that a 10x on $100, $100 investment is a $1,000, right? But a 10x on a 10,000 is 100,000, and all of a sudden, instead of making $900, you're making 90,000. It exponentially grows just depending on what you put in at the beginning, right? And that's why they also teach you about sort of compound interest. The earlier you get money in, the better chance it has to grow because there's more time for the interest to accumulate.
Right, right. Some really good words there, and I hope people are taking notes. This is the investment strategy that has defined, like you said, the people that have outperformed the market over the last several decades. Bitcoin is the top performing asset of all time, which you said earlier. It's important to remember that. Um, and let's talk a little bit about Ethereum and what's
Mm.
different about Ethereum, because I'm bullish on both. And again, none of this is investment advice, but if you were to, you know, make an investment today, those might be the only two I would fuck with if you don't know anything else about crypto. Um, and I think that's really a thesis I see a lot of people hold, because where
Mm.
Bitcoin you can see as digital gold, or it's like this OG store value, it's the first one. Ethereum is on a whole nother level because it's a world computer, and it's
Uh-huh.
hosting an ecosystem of a whole bunch of stuff. So I'm curious if you can break down Ethereum quickly for us.
Sure. Yeah, it's definitely different. And they're not competing to be the digital currency. They have different use cases and a much needed use case from Ethereum. As you put it there, it's like a world computer. Um, I, it's the Ethereum network is what they call a Turing complete network, which means that you can write code and you can have it compute. In the EVM, which is it's the Ethereum virtual machine. And to support paint a picture of it, and the same goes for Bitcoin and Ethereum. When you're running a network of nodes, imagine you see the graph of like all the little dots of all the computers, and they're all connected in a decentralized way, like a spider web,
Hmm.
like a torrent. Each of those is an endpoint, and normally when you have a piece of code, it's sort of residing on one computer, and you can send a signal to others to verify. But in the Ethereum virtual machine, in a decentralized network like Ethereum, it's almost like it's sitting in the cloud, It's sitting on all the computers, right? And when you put a piece of code out, um, like a smart contract that is essentially just a piece of code that says, "Hey, let's put some funds in here," and then have people be able to leverage them, or have an app that can uh, move funds from one blockchain to another, or any other thousands of use cases of smart contracts, which is essentially just having code being able to make some functionality automatically. It allows for moving the all industries, but most importantly and firstly, the financial industry into a more digitized, fair way that allows people to do things that they couldn't do by themselves in the traditional financial industry, like get loans, make transfers, all these other kind of financial products. Now, instead of going to the bank teller and then they send the money to their fund managers and they do what they will with it, those processes are being transferred into a decentralized network that's accessible by anyone in the world. And that's really opening the world uh, for digitizing uh, everything, and really opening the financial world to beyond just the borders of one nation and the antiquated technologies of some companies that started it. You'll be able to make a loan. Doesn't matter what country you're in. And of course, regulation is going to come by to hopefully protect people in all areas. But in the same way that you could transfer Bitcoin to Australia in a few minutes, you can make a loan of somebody in an emerging country somewhere in Africa needs to get a microloan of $100 so that they can buy more farm supplies so they can run their farm. They don't have access to a bank and all of this stuff
Right.
nearby. That's a brick and mortar, but they do have access to these decentralized networks that are open to everybody, and they can start, leveraging. If they have some amount of money, they can do what I was talking about with those rich people, where they don't sell their assets; they leverage them to get a loan, and through smart contracts and without credit, they can get small uncollateralized loans in any country in the world. It doesn't matter what country you're in when you're using DeFi.
Yeah.
And this is uplifting all of these emerging countries that are where people that are unbanked or underbanked, bringing more financial inclusion to everyone around the world. And that's the power of Ethereum. Never mind having a whole protocol for creating applications on top of it, for the same kind of applications that we would see in the Apple App Store, the Google Play Store, and on your Windows operating system. All of those applications and applications like Instagram that we're on right now on our phones, those are, these are all centralized applications, versions of these that are decentralized, that change the way that the governance is, in the same way that Bitcoin changes the governance from the US dollar, where it's a small portion of people controlling it, to fully decentralized. Applications can be coded and put onto the blockchain, a new version of a decentralized Instagram, where the governance of it and the updates and the way that it grows can be governed by everyone that uses it. You and me will decide how we like the application that we're using right now, and we can vote in a decentralized organization. And if we're users of it, then we can decide the future of it. And also, it's better protection because there's not a single point of failure where the information is stored, right? And that's what we've seen throughout social medias in the last 5 years. LinkedIn's been hacked, Twitter's hacked, Facebook was hacked, everyone's hacked. All of your personal information that you gave to these companies, of your name, your birthday, your email, your address, your credit cards, all gone to hackers because you trusted the people that run these trillion-dollar apps, and it's all gone, right? And with decentralized identities, decentralized apps, in the same way that you're moving the power of control of the funds with Bitcoin into your own wallet, you're moving the power and control of your personal information and your identity into your own wallet. That's the future of identities on Ethereum, of decentralized identities. So many more use cases that Ethereum opens up, not just with money, but with information, applications, everything else, because of the Turing complete programming language on Ethereum. So it is a whole nother can of worms to dive into before you go into any of the other blockchains and stuff. But it's, there's talking about recent news, there's this big transition going through on Ethereum right now where they're looking at changing the consensus mechanism of how transactions are verified and new ether gets minted into the world from the way that Bitcoin was with proof of work into a new style with proof of stake. Right. So that is causing a lot of sort of hype and momentum in Ethereum right now. In June, Ethereum hit a low of $800 after being as high as almost $5,000. And since that $800 low, we're back up to $2,000. So in that 2-month span, this asset has doubled in half from the lows, and right. It's looking like it's continuing in at least the date that the network is supposed to move into its next version of the Ethereum 2.0 is tentatively set at September 16th. So we're about just under a month away from that, and it's anticipated that the Ether will continue to rise until then, but also the smart investors are playing on that news that there may be people hyping up the asset for that and sort of selling the news and a bit of a sell-off. But that's the games that people play, this 1% to 99% games that people play at all time frames. In the long run, with smart investors looking at the long-term investment horizon, many are still agreeing, Ethereum deserves to be $10,000 plus per coin.
Right. And I think long-term, we are definitely headed there just because of so many of the things you eloquently described about the amazing problems it solves and how it can literally help build us decentralized internet and Web3. And we didn't even touch on all that stuff in metaverse and NFTs, which we might have to do another one. But Ashton, if people want to connect with you, watch your show, where can they go and find you?
Thanks, Kevin. Yeah, the best place is on YouTube. Just type Ashton Addison or just look up Crypto Coin Show, and you'll see I'm doing interviews with founders, different use cases, different protocols, almost every day. And it's not. People have to understand that there's so much content on YouTube for whatever you want to know. You can literally type, I want to know how does Ethereum mining work, and there's 100 videos. My videos are more catered to people that are already holding Bitcoin and Ethereum, and they're interested in potential investment opportunities and good projects that are coming out. So I'm having a different project on every day, but often they're a new blockchain or a use case on top of Ethereum or a use case on top of a blockchain you may have not heard as much about, like Waves or Cosmos. So once you fully understand Bitcoin and Ethereum, you will start to realize all of the other opportunities of the thousands of coins that exist, thousands of projects that are all startups that some of them have huge potential. There's like the power law where 90% aren't probably going to be that good, but there's that 10% that could be the next Google, could be the next Ethereum, right? And that's why I'm looking at that, because Bitcoin is the best performing asset of all time. Ethereum is also up over 20,000% since it started, and all of these other coins that have the potential to do that if they have the next Google backing them. And if I'm speaking to them at the beginning stages of that in the startup phase, and I can see that potential, then maybe I'm getting a part of the next Bitcoin. And that's why I do interviews, in part to bring people awareness to these startups early on. But people have to understand that, I way back in the day, 5, 6 years ago, I used to do videos about what's Bitcoin,
Right.
but I'm sort of past that point in terms of the content that I like to produce. So you will see those
Right.
interviews on Crypto Coin Show as well. I could share you a link, but our newsletter, Substack newsletter, is growing really quickly, and often I do a newsletter where I put in 2 or 3 of the best interviews of the week or of the 2 weeks, and then I also put in a bullet point of like, here's 10 things that happened in cryptocurrency uh, this last 2 weeks that are the most important that you need to know about. So I mainly my Twitter at Crypto Coin Show, YouTube,
Right.
and the newsletter is where you'll find all more information about how to learn more on crypto.
All right, Ashton, you're the man. Thank you so much for sharing, brother. And if you're not following him here, follow this man and then go check out Crypto Coin Show on YouTube. Definitely expert level, but there's also something for everyone because it's just about getting in,
Mhm.
getting your feet wet, learning. Brother, buenas noches, buenos dias, where you are. Stoked to see you when I see you, maybe back in Tulum, maybe somewhere else. And big love, man.
I think
Thanks.
so. Thank you so much, Kevin. Appreciate it. I appreciate the time, and have a great day, everyone.
Ciao.